Hello, my valuable viewers. I am super happy to see you back on my channel, and today I'm gonna give you another fascinating session. We're gonna check together the markets and what's going on, right? Today is the 20th of March 2026, Friday, and for the last 2 weeks global markets have been heavily influenced by one key factor which you're probably aware of. Exactly, that's the escalation of the conflict between the United States and Iran. So now, whenever we have geopolitical tensions like this, markets don't just move randomly, they react immediately. And this reaction creates huge trading opportunities for those that trade the markets. So in today's video, I'm going to walk you through 4 major classes of assets. We're gonna look at gold, we're gonna look at the oil, we're gonna look at the stock market and the Forex market. So we're gonna break down how these markets reacted over the last 2 weeks. And more importantly, what kind of opportunities this situation might be creating for you right now. Because here's something very important, what they say in the market. They say whatever goes up a lot like oil has to go down. And whatever goes down a lot, for example, like the stock market, has to go up. So there's no trend that lasts forever. There's no crisis that lasts forever. So at some point it will stop. And in today's video, we're going to discuss where the prices are now and where they are expected to be, so that you can be prepared and take advantage of that and possibly make money. Let's move to my screen and we're gonna go one by one, and we're gonna start with oil. Okay, so let's start with oil now. Oil is usually the first asset that reacts to geopolitical tensions, as you probably know, and the reason is very simple. Oil supply is directly connected to the global stability. Now, when we talk about the Middle East, we are talking about one of the most important oil-producing regions in the world. So any escalation in this region immediately creates fear of oil disruption. And that's exactly what we've seen over the last 2 weeks. Oil prices have been moving higher because the market is pricing in the risk. Now, here's the important part. When prices rise too fast, they often become overextended, which means that at some point we may see a correction. So from a trading perspective, we're not just looking at where the price is going now, we're also thinking ahead. So what happens if tension eases? What happens if supply stabilizes? So that's where the opportunities begin to appear. And let's look at oil and how the dynamic of oil prices was moving for the last 2.5 weeks. And we're gonna go here and start from the beginning of the conflict. I'm gonna point to you where the conflict started. As you may see, it started over here. And let's look at the prices that oil was right at the beginning. So look, it was $73 by the end of February, $73 per barrel. Now, by the time it started and the market opened on Monday, on the 3rd of March, the price, 2nd of March, sorry, the price already gone up to $83. So it's gone up by $10 right away within, let's say, opening of the market within the day. But since then, I want you to pay attention how oil prices was going up, and it was going from $83, it was going up to, let's say, $94 by the 6th of March. And then by the opening of the next week, you see, 9th of March, it already hit $120. Now it hit that high level and started to drop down. So from 9th of March, from $120, oil was going down for like almost 1 day, you see, until the end of 10th of March, right, until 5 o'clock, and the price gone down to $80. Imagine, from $120 per barrel, it dropped down to $80 per barrel, like lost $40 per barrel, right, within 1 day. That's what I was explaining to you regarding an opportunity. Whatever goes up a lot has to go down. And then look at this. Since it gone down to $80 and the conflict, as you may know, continue, right? The oil price continued to go higher, and it was going higher for the last 1.5 weeks until yesterday, when the price again hit $120. So it seems that it already twice hit 120. Then this already creates some sort of a huge resistance, let's say, level from where it dropped down again. You see, from 120 it dropped down to 109. So it's actually dropped down by almost hundreds for about $11 since yesterday. Right now it's $109. As I said, they say that if the conflict continues, it creates an opportunity for oil to go higher. So let's say that the conflict will continue. I'm going to give you an example, and you want to trade, for instance, let's say 1,000 barrels. Okay, let's say 1,000 barrels. In order for you to be able to trade 1,000 barrels, if you're trading on your trading platform with leverage, and as you may see, my leverage here, it says 1 to 50. So 1 to 50 is my buying power, and it means that I need 50 times less than the actual price of oil of the barrel to buy. So therefore, in order for me to buy 1,000 barrels, I only need $2,185 of my account to invest to buy that much. However, in order for me to invest that much, I need to know how much I would like to make in return. So let's say I'm gonna put here $120. That's, for example, where the oil, if the oil goes back again to 120, like it was already hitting that level 2 times in the last 2 weeks. Okay, what is my potential? What is your potential? Let's put it that way. So if you do that way, $120 as your target, as you may see, oil keeps going to that level now. Okay, look, your potential is to make $10,000. You can see it over here, $10,000, right? In order for you to make in a profit, should you invest only $2,185 buying 1,000 barrels? So this is an opportunity for those that believe that the conflict will continue, and those that want to buy some oil now, because the price now is, we may say it may be cheap compared to where it may go, because they say it may go 120, 150 if this conflict continue. Now, on the opposite side, if the conflict will gonna start easing, right? If it's not gonna continue, but will go down, then we can see and we can go for, say, for the selling option. And let's say oil goes back to $80, right? What it was just recently, with the same amount of, let's say, $2,184, okay, investment. Your potential is to make $29,000, right? So you're about to triple. Sorry, not to triple, but to 10 times fold, right? 10 times more than your investment, right? 10 folds. $29,000 back in return should oil price just go back to $80. So you see, it creates a huge opportunity for those that want to try to maybe sell oil because it's very high right now. So if you just closely look at the conflict, okay, and follow it and see when it starts slowing down, that's where you can see the opportunity coming, and that opportunity could make you a lot of money. So take advantage of that. So this is about oil. Now you're familiar with that. Now we're moving forward to the next one. We're gonna look at gold. Now let's look at gold. Gold is known as a safe haven asset, which means that when uncertainty increases, investors move their money into gold. And that's exactly what we've seen in the beginning. When the tensions increased, the gold demand increased as well. However, if you look at the graph now, and if you look at what happened to the gold later, we will see something very unusual. Look at the beginning of the conflict, like I said, the beginning of March, and the gold price back then, as you may see, was $5,278. That was the price of gold before the conflict. When the conflict started, the gold price gone up to $5,400, right? Because of that uncertainty and stuff. However, if you look at the latest trend, okay, from 4,000, the gold keeps going down, and it's actually came up to $4,693. So if you look at the actual price, the gold dropped down from $5,460. It dropped down like almost $1,000 lower since then. And the only reason for that now that I can see myself is that they're just selling gold from the highest level to be able to buy the oil, because now it's so expensive. So I believe that the capital from gold is just simply shifting into oil, and that's the reason why gold gone down so low. Now, talking about the opportunities, we want to look at what is the potential. So gold gone down that much, let's say $4,600. Considering that it was at $5,400, let us give you. Let's look at the graph. So let's say you want to go and buy 100 troy ounce of gold. In order for you to do so with your leverage, which is 1 to 50, like I have, okay, you need only $10,000, 9,386 to be specific, in order for you to be able to buy 10 troy ounce of gold. And let's say that's 100 troy ounce of gold, my bad. And then let's say that you want to make some profits and you expect that gold is going to go back, let's say, to $5,400 where it was just recently. So investing 10,000, let's say 9,390, right? Your potential is to make, as you may see here, $70,000. Right, so investing 10,000 is going to give you an opportunity of making 7 times more than your investment. So we're talking about 700% potential return, right? So keep in mind that this is another opportunity that you may want to be looking at. So once the conflict will ease, the rest of the, let's say, demand of gold that was before the conflict will come back. Because a lot of governments and central banks in the world keep buying gold because they're just getting rid of the dollar. And considering what happened now and with the US starting this conflict, I'm expecting that the get rid of the dollar will continue and the oil price will continue going higher. And according to Goldman Sachs, they expect that the price of gold will reach 6,000 per troy ounce by the end of this year anyway. So we have a huge opportunity of buying gold while it's still cheap. So keep that in mind. So this is an opportunity with gold. All right, let's move forward. Let's talk about stock market, and we're going to look at US 100 index, which represents 100 biggest companies in the US. So stock markets generally do not like uncertainty. So when geopolitical risk increases, investors become cautious, and that often leads to selling pressure. So over the past 2.5 weeks, we've seen volatility in equity markets. And that makes sense because businesses, investments, and economic outlook all become uncertain during conflict. So now again, this creates opportunity because if the situation improves, stock markets can recover very quickly. So the key here is not panic. The key is preparation, understanding where the market is now and where it could go next. So let me show you how the market reacted on it. So if you look here, the market started to go down, right, since the conflict started from $25,434 for one share. It gone down to $24, as you may see, up until here, $24,352. So we can say that the Nasdaq 100 dropped down by about $1,000 in value. So let's say when the conflict eases, right, what you can do about that, how you can take advantage of that. So let's say you want to buy it once the conflict goes down and you want to go there, let's say, to buy 10 shares. So to buy 10 shares, you would need $4,871 in order for you to buy that much, as you may see here. Okay, and that is again because of your leverage, okay, 1 to 50. So you need 50 times less than the actual price of the share. Not 25,000 you need, but you need about, let's say, $4,600 or something for one share, right? With your leverage though. Now, when you trade that much, and let's say that the price of Nasdaq goes back to where it was. And as we said, it was at 25,450. So it was $25,450, $1,000 higher. So imagine investing now $4,872, buying 10 shares will potentially give you an opportunity of making $10,000 back in return. So you're about just to double your investment should you go and trade that much. Okay, so this is the opportunity that you have with the stock market. So you trade Nasdaq, you can see that. Now, if you look at Nasdaq on the longer scale, you see it's down like this. But if you look at this, let's say on the 12-monthly chart, you understand the trend of the Nasdaq, which will create for you, let me just put it like that. Okay, right, 12 months, sorry, I should put monthly, so that you can see 1 month, yeah, like that. So if you look at Nasdaq, okay, and the Nasdaq monthly movements, you see, TradingView allows me to see it only that way. Okay, let me put it that way. So this is monthly chart on Nasdaq. I just want you to pay attention how this index is performing since April 2015. So in the last, let's say 10 years, 11 years, you see this index keeps going up. It keeps going up without stopping. It stops from time to time. You see these drop downs, they actually represent the timing in the world when something big happens. Let's say financial crisis, or 2022 when the war started with Ukraine and Russia. Okay, we see COVID over here, right? That's in 2020. You see that drop down, and now we can see that the market came to 26,000, and that was in the beginning of the year in January, 26,000. Since then, it keeps going down for 2 months. So 2 months it's down. But if you look at previously, every single time this index goes down, it creates an opportunity to buy the dip later. And after it actually goes down, right, it skyrockets and brings the new record high. So if you're willing to invest, let's say in the stock market, this might be a good opportunity for you to consider to buy the dip should this conflict start easing and more certainty comes back to the market. So investors are going to shift their interest back again to equities and back again to the stock market. And like I said, the potential of making 900% return is still there. So this is just quickly about the stock market, just for you to have an idea, the opportunity is there. Let's move forward, and now we're going to talk about the Forex market. Now, let's talk about the Forex market, basically the currencies market, okay? Just so you understand, currencies react to both economic conditions and global risk sentiment. And during uncertain times, we often see movements towards stronger or safer currencies. But at the same time, currencies linked to commodities, like for example, Canadian dollar, they link to oil, they also react. So what we've seen over the last 2 weeks is the shift in the market positioning, and investors are adjusting based on risk, and this creates movements across multiple currency pairs. And now again, the same principle applies when markets move in cycle, right? So what is strong today may weaken tomorrow, and what is weak today may strengthen tomorrow. And so the goal is not to chase the move right now. The goal is to understand what is the cycle. Okay, and that's exactly what we're going to do now. We're going to observe the top global, let's say, currency pairs in order for you to understand where they sit since the conflict started and where they may go should the conflict stop. Okay, so let's move to my screen, and we're going to take and we're going to look here. So we're going to start with the Euro US dollar. Okay, you can see here Euro US dollar. I'm putting the graph specifically on one daily graph. So every candle now here represents 1 day movement. That will be easier for us to reflect on the movement in total. So I'm gonna bring the mouse on the beginning. Here we go. You see, at the beginning of the conflict, the price, the exchange rate between euro and US dollar, because that's the euro US dollar currency pair. So the exchange rate was at 1.18. You can see that here, 1.18. That was the exchange rate just the day before the conflict started. And since then, you may see that the euro fell down day by day. This is 2nd of March, 3rd of March, and basically going down, 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 up until it dropped down to 1.14. So imagine the difference between 1.18 and 14, that's 400 pips. That's the huge distance that the market gone down for the last, like, what, 1.5 week. Okay, since it gone down to 114, it came back to 115. So it's recovered by almost 150 pips back. Now, what is that 400 pips? Just so you understand, when you do your trading, that pip value could be different. It could be $1, it could be $10, it could be $100, depending, of course, on your trade size. So imagine if your pip value is just $10 and the market gone down by 400 pips, we're talking about $4,000, right? That you could actually have made if you would be just trading one lot trade size. Now with the leverage 1 to 200, that would just require from you about, like, what, $500. So that's how much you could make, right, by trading that small amount with that huge, let's say, movement down. Now, in order for you just to understand, now the market is very, very low compared to what it was. So should the conflict ease, right, the US dollar may continue to start going down. right, like it was doing before the conflict started. And remember, by the time any uncertainty or any type of this conflict starts in the market, what happens? Investors shifting into low risky assets, and that's gold. And that's also US dollar in this scenario. So they're buying dollar because in order for them to buy something else, let's say to buy gold or to buy anything else, because majority of assets in the world are quoted in dollars. So they're buying a lot of dollars. And in this type of events, dollar is getting stronger. That's why euro gone down. Now, if we look at the euro-British pound, okay, we look at the two currency pairs in Europe, okay, and we're gonna look at the beginning of the conflict. You see here, so the exchange rate was 0.8787, right, and then it dropped down. Okay, euro dropped down against the British pound to 86.50. So it dropped down, give or take, about 150 points down, right? Since then, you see the British pound basically it's weakening a bit and the euro getting stronger, right? For the last, let's say on Friday, you see how much it gone up quite a lot, right? So this is euro GBP. Now, if you look at the USD Japanese yen, that is a very common currency pair that is used for trading, right? And we're gonna look at the beginning of the conflict. Okay, here we go. So look here. So the exchange rates between the US dollar and Japanese yen was at 155 by the beginning of the conflict, and since then the US dollar gone up a lot versus Japanese yen. As you can see, it hit 160, which is historically one of the highest levels. You can see even here, right? Every time it comes to that level, it rebounds back. So it's like a very strong resistance level, okay, to be seen here, and this is why it rebounds back. So look, 160 compare, like I said, to 156. So it gone up by 400 points, right? 400 points, then it dropped down from 160, it dropped down to 157. So it dropped down by about 300 points, 250, give or take. And it going back for the last, for the last day. So look, in order for you just to understand, you see, it's a lot of movements happen in different currency pairs. So if we check it the same way, let's say with the British pounds, you can see that on the beginning, here we go. The British pound keeps dropping as well as euro against the dollar, right, since the conflict started, because the US dollar getting stronger. So all this type of drops, as you may see here, right, create that opportunities to either buy the dip or sell from the high. Okay, so let's say we're gonna go and look at the USD JPY, okay, and let's look at the price where that was before the conflict. As I said before, it was at 155.85, right? Let me say that the conflict stops now and the price goes back to that level, okay, and therefore we're gonna go to sell it, and let's say we're gonna go to sell it with 100,000. Okay, trade size is basically one lot, so one lot trade size, right? Have a leverage 1 to 100, and therefore I need just $1,000 in order for me to trade that. And let's say I'm gonna go to the price as it was, 155. Okay, so that was the price that I wanted to go. In order for you just to understand the potential, okay, if you trade just one lot trade size with the leverage 1 to 100, let me just point it here. This is how much you need in order for you to trade 100,000. Okay, so you're basically selling 100,000 US dollars. And because of your leverage, which is 1 to 100, your leverage could be bigger, by the way. It could be 1 to 200, 1 to 300, even 1 to 1,000, right? And of course, your required margin would be lower than that. But with my leverage, okay, I need $1,000 to trade 100,000. And my potential return, so if you look at my potential return, it's $2,635 dollars to make. So it represents, give or take, about 200% potential returns should the basically the price of US dollar versus Japanese yen just goes back to 155. Okay, and that might be the case if the if the risk basically starts to go lower. Okay, so this the same way we can do with the rest of them, let's say, and you can do the same on your trading platform, for example, just to see where the price was, okay, and just to see where the price may go, okay. And if we take, for example, all right, that was US dollar Japanese yen. Let's look at the euro US dollar, for example, okay. With the euro USD, as you can see, the highest level was at 120. okay, and since then it dropped down to 114, 600 pips. Now it's recovered a bit. So let's say that there's an opportunity to buy it, okay, once the conflict starts to going down, and we're gonna go and let's say buy 100,000 as well. So with the leverage of 1 to 100, as I was showing before, to trade 100,000 trade size, I need $1,157, because that's going to be 100,000 euros. Okay, and then with my leverage, which is 1 to 100, you see that's how much I need. And let's say I want to make some profits, so I want the price to go back to 1.20. Okay, so that's where I want the price to go. So should the price go up to where it was, and this is the level, okay, just so you see, that's the level, 120, right? Should the price go up to here, right, from the level it is now, look at my potential return. My potential return is gonna be $4,280 to make. So we're talking about 335% return, right? Possibly that you can make once the price gonna go back to 120. Where it was just before the conflict, okay? So the only reason why the price of euro dropped down, because of the huge, basically, selling euro and buying dollar at that time. But again, you never know when the conflict will ease, and at some point it will. It's nothing that lasts forever. No conflict, no crisis, no trend that lasts forever, same direction. So at some point it will turn. And that is what you basically need to be observing in the markets. And this is exactly why you need to be looking into the, let's say, news and following what's going on, in order for you not to miss the entry point. An entry point when everything starts to shift back again, right? Whatever gone up a lot will eventually start going down, and whatever gone down a lot, like for example you see here with the euro, right, eventually is gonna go back up again. So everything is temporarily, as well as the trends in the market. And if you look, for example, at the graph itself, okay, if you do it like that, you can see that the markets are actually cyclical, right? Whatever goes up, going down, right, keeps going up and down, up and down. So markets never go one direction, because people never just buy, right? They also sell. And obviously people never just sell, they also buy. So when the price reaches a certain level where there's no more buyers or there's no more sellers, that's where the price is actually turning back, okay? And that's what you need to be aware of, and you need to know when that happens. So this is why I want you to subscribe to my channel down here, so that you can follow me on my next sessions, where I'm going to be explaining to you what's going on, and obviously where to take advantage of your trading. Okay, so this is something that I want to just quickly discuss with you about Forex market. I think this is also clear for you. Very quickly, I want to show you something. Okay, so this is my Telegram channel. Okay, on my Telegram channel, what I actually do here, I post the most important and essential news that actually moves the markets. Okay, that's something that you need to know how important is for you to follow that. We just discussed that recently. So there's no noise, no unnecessary information, only the most important that allow you to take informative decisions. So basically only what matters. Right, so if you want to stay updated and keep your finger on the pulse of the markets, make sure you subscribe to my Telegram channel. Okay, here I also, as you can see, share signals, trading signals. Okay, and they're very accurate, they're very good, so you can see the results coming right away straight. So which means you can take advantage of the market's opportunities in real time. So if you just simply want to stay connected with what is happening on the daily basis in the market, and basically this is the best place for you to go, right? And like I said, just join me on Telegram. A lot of valuable information that you're gonna find there, as well as the signals. Very important, right? If you want to do trading every day, signals with the outcomes of each signal, so it's obviously always being proven. Now, every week, if you just check down there, every week I'm doing a review of every signal given, and you see the accuracy of each signal. Okay, and I'm gonna show you the latest one. Okay, if we just scroll down a bit more, you see how much, oh, here we go. So week 16 of 20, you see it's been 17 signals giving through the week, and the accuracy is 82%. 16,059 pips in total, right? You can see every signal giving and the result of that. So it's a very good accuracy. You will barely find anything like that. So if you wish to take advantage of that type of trading, as well as getting the information about what's going on in the markets, just subscribe to my Telegram channel. And for those of you who want to take trading further, and of course, if you want to actually learn how to trade and understand the market properly, so for those of you that want to take it seriously, I offer one-on-one mentorship through my academy called Beat Your Broker One-to-One Trading Academy. So we will meet face-to-face on a Zoom session. And the very first session I offer completely free of charge. So it's going to be a good opportunity for us to meet together face-to-face, and during this session we will discuss your goals, your experience, and what's the most important, whether trading is something that is right for you. Okay, so if you, like I said, would like to take trading into the next level, and you want to take it obviously and turn it into your source of income, that's exactly what you need to do, right? I will help you to understand what exactly needs to be done to achieve your goals without any pressure, without any commitment, just with pure clarity. All right. So like I said, if you're serious about understanding trading and possibly turning it into your primary or secondary source of income, okay, so check the link in my bio below, right? And then leave your contacts, and I'll get back to you, and we're gonna get you on the free training session just to understand your goals, right? And we're gonna take it from there. First of all, thank you very much again for your time today, and obviously observing the markets with me in general. Okay, now you know what's going on, at least this week, okay, and you know what may be happening next week ahead. Okay, let's be in touch and let's see what happens next. All right, so subscribe to me not to miss an opportunity for the next week. All right, bye bye for now.